Alright guys, so let's talk about the EU economy today. I really think Europe needs to understand what can be unburdened by what has been. Over the last 3 years, things have been getting from bad to worse. The biggest engines of Europe are starting to crash, and GDP growth is one step away from collapse. France, for example, is in a fiscal crisis. Their deficit this year could exceed even the United States at 6% of GDP. The total debt accumulated is at 3.2 trillion euros, more than their entire economic output. France just isn't exporting enough. Their trade deficit is over 5 billion euros every single month. The country's debt has also been downgraded, and if you're Macron, your priority should be the economy. Italy is another example of a debt crisis waiting to explode. Since Meloni became head of state, spending has been exceeding revenues. The gap is now 120 billion euros. Italy, like France, isn't making enough money. Especially when it comes to trade, Europe is in a very big quagmire. They can't tax their citizens anymore because people they're just flat broke. Consumers don't have money, and the last thing you want to do is to punish one of your biggest trading partners. It's really unthinkable, it's really silly, but the EU has once again exceeded expectations. To pander to Washington, they have alienated their biggest exporter of deflation and the biggest consumer class in the world, which is China. A week ago, the EU held a vote to confirm punishments on EVs from China. Two of the biggest economies, France and Italy, they said yes. The Baltic states from Estonia to Lithuania also voted yes. And because of this, the entire EU is about to get hammered with a trade war against China. This means countries that voted against it like Germany and those who abstain like Spain will get clobbered as well. Just like the Three Musketeers, it's one for all and all for one. And if you are China, you have to assume a few things. That the EU will continue to corner your economy and checkmate your industries. EV manufacturing is a key pillar of your economy. The EU slapping a tariff of 30 to 40% is most definitely going to hurt the value of your exports. Margins for Chinese automakers are going to drop 100%. It's no surprise that China is hitting back. Beijing has warned Europe not to go ahead with this and not to follow the US playbook of containment. And now that they are, China is following up with counter punishments. China has slapped the EU with Brandy import taxes. They are putting the mirror to EU tariffs and punishing them with anti-dumping penalties. This is pure retaliation and is a warning to Europe that more pain is coming unless they U-turn their decision. Beijing is going to make it very painful for brandy exporters in the EU to access the Chinese market. So if you're a Chinese importer of EU brandy, you now have to pay a deposit of up to 39% of the import value, and that's equivalent to a 39% tariff and is a very brutal levy because this isn't a very high margin business. Unsurprisingly, shares in multiple liquor brands fell by a lot. LVMH dropped by over 4%, and the parent company of Remy Martin fell by almost 5%. So major French stocks were clobbered because earnings were most definitely going to come down. It's important to note that China is calibrating their response to the EV tariffs. If we look at the size of brandy exports from the EU to China, it's less than $2 billion. But the value of Chinese EVs to Europe is more than 6 times the amount, almost $13 billion easily. And this tells us that Beijing has more cards up their sleeves. Punishing EU brandy is just the first salvo of many more to come. Now, on this channel, we like to take things on a strategic level, and it's important to understand Europe's trade options going forward, and it's not looking good. The biggest trading partner of the Union is, of course, the United States. But the biggest election risk to China is also a trade nightmare for the EU. And we are talking about Trump. He wants a global tariff of at least 10%, which will clobber the G7 as well. Trump has made it crystal clear that even the EU is not exempt. In fact, he wants to bring auto manufacturing back to the US, and guess at whose expense? It won't be China because they are already outside the US.
I will turn the United States into a manufacturing superpower more than it has ever been before. We're going to bring back the car industry. We're going to bring back the car industry. Other countries that make us pay a tax to do business with them will be charged the same tax when they send their product into the United States. We have countries, not only China, many countries, many of them are allies. Some of the worst trading countries are allies. Don't let that word surprise you. They're allies, they're friends of ours, and they take advantage of us horribly on the military with NATO and on trade. It will be called the Trump Reciprocal Trade Act, and if China or any other country charges us a 200 or 100 or 300% tax, then we will charge them a like 100, 200, 300% tax in return.
Now, if this sounds wild, it isn't. In 2018, when Trump was still president, he gave a threat. He warned that the US was going to slap a 25% tariff on every car from the EU. And that was 4 years back. Look at the EU economy today, it's on life support. If Trump comes back in and punishes the world, Europe will be the most affected. So 27 member states of the EU minus Hungary are now in big trouble. Not only have they pissed off China, but there's also a very good chance Trump enters the Oval Office in January. The biggest loser in this trade war, to no one's surprise, is, let me guess, Germany. There's a chance that China could target the auto industry there. And if that happens, the Germans would be in a terrible crisis. German brands are already collapsing in the Chinese market. BM's China sales plunged by nearly 30%. The same situation for Mercedes, their China sales fell by over 10% as well. It's a clear sign that German car sales are on the decline, and it's not even due to the energy crisis. Remember that a huge amount of BM and Mercedes cars, they are made and sold in China. So they are benefiting from lower energy costs, they are benefiting from superior supply chains, but they are still losing out. Why? Because local Chinese EVs, they're eating their lunch. The technology and the cost efficiency there is very far ahead. The downtrend we see here is only going to continue. In fact, it's going to get worse. The more the EU punishes Chinese exports, locals in China, they're going to start shunning Western brands. They will buy local Chinese EVs instead. The Chinese government is already telling their companies to buy local semiconductors, to dump Nvidia and buy Chinese-made chips. So if push comes to shove, there could be a directive to do the same with EV sales. The auto sector is facing the abyss here. Volkswagen is pleading with the EU to drop the tariffs. Oliver Bloom, the VW CEO, knows the big risk to German automakers. If VW cars made in China can't compete, it's game over for all their other exports heading to the Chinese market. This is an extinction level threat. Here's how much is at stake for Germany. Just last year, 15 billion euros of German vehicles were exported and delivered to China. And that's 15 billion in revenue that could get punished. Imagine what would happen if regulators they match the EU tariffs. A 30% or 40% tariff would instantly make all German cars very uncompetitive. Their market share will collapse in an instant. So the situation is very precarious here. The Germans, they have a labor and energy crisis that isn't going away. Cheap Russian gas is politically impossible, we all know that. And nuclear power isn't coming back, you have to thank the Greens for that. So manufacturing costs can't come down. They need China to buy their cars and to maintain existing trading relationships. But the EU tariffs are pushing Beijing to retaliate. So Berlin is caught in quicksand, and their fate lies with the EU Commission with von der Leyen. While the EU tariffs might hurt China, Beijing has other places to sell to. Their exports will survive because they are pivoting to markets that are expanding. China doesn't even need to look far. The biggest buyers of EVs don't come from Europe or even Asia. The widest pool of demand comes from Chinese consumers themselves. BYD is one of the biggest EV companies in the world next to Tesla. And in September, their total sales grew by 45% year on year. That's an incredible 417,000 electric vehicles sold. However, less than 8% of total sales came from overseas. And this tells us that the fear of overcapacity is overblown. China itself is the biggest consumer of EVs produced in the country. The Chinese market is so big that even Tesla cars made in China are easily absorbed by local consumers. They know the biggest driver of EV demand isn't the US and much less the EU. Despite the political heat, Tesla can't exit Beijing. It will ruin the company. And listen to this, deliveries of the China made Model 3 and Model Y to other markets, including the EU, grew by only 1.9%. Remember, this was in September before the tariffs were even confirmed. In China itself, Tesla sold more than 72,000 EVs, and that's a 66% increase year on year. And competition within the Chinese ecosystem is already extremely fierce. While the EU is still a significant market for China, demand is going to fall. Germany's subsidies are over. EV demand in France is also down by over 30%. EU car sales are at its lowest point in the last 3 years. Throughout the entire 27 member bloc, EV sales have fallen by 44%. The market here is in free fall without a parachute. Consumers in Europe just don't have the money to even buy affordable cars from China. That's how serious the situation is. Plus, the governments are so thinly stretched that giving incentives is not possible. We all know where the money is going to. Now, there's a famous Wayne Gretzky quote in ice hockey: "You skate to where the puck is going to be," which is exactly what China is doing today. The future of demand isn't the G7 any longer. In 2024, the biggest driver of growth will be the BRICS countries. India, the UAE, and China's growth alone will be more than the global average of 3.2%. This means a middle class getting richer with more and more purchasing power. However, just look at Europe's growth. France and Italy at less than 1%. Germany is the worst at only 0.2%, which I would argue is already too optimistic. The German economy probably will be at zero or negative growth this year. Europe's trade war with China won't end well, especially for the EU. Their trade deficit will only grow wider and inflation will only fly up. The risk for Europe is, ironically, globalization. China's Brandy punishment is an indicator that Beijing can source for their imports elsewhere. And the next sector at risk is EU pork imports. The Chinese have warned that tariffs are coming. The biggest loser in this case will be Spain. Around 20%, a fifth of all Spanish pork exports goes to China, and that's over €1 billion worth of trade in jeopardy. The biggest winner is Russia. Beijing imported over 1,300 tons of product from Russia in June. That's quadruple May's figure, showing very strong growth. Until February this year, Russian companies didn't even have access to the Chinese pork market. However, now they can sell into China. If China broadens out their retaliation to other categories, pork imports might be next in line. Whatever the EU loses, Russia will gain. So Europe is really sandwiched in a bad place. They are facing a protectionist America that wants to tariff everyone out there. They pissed off China as well, who's now demanding payback. Because the cost of manufacturing is so high, exports to the rest of the world are also falling. So the EU has really boxed itself into a very, very tight corner. But let me know what you think. Between the EU and China, who will suffer more? And will the EU do a U-turn on their EV tariffs? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.